Talking about numbers, we have Glenmark Life Sciences, which is up and about in trade after reporting what is a strong set of Q4 numbers. The stock is actually very close to its 52-week high as well, 516 rupees for that particular stock. The company reported what was a 21% revenue growth in Q4 on a year-on-year basis. Margins also improved significantly. The profit has also zoomed over 48% on a year-on-year basis. Remember, Glenmark Life is basically the API CDMO arm of Glenmark Pharmaceuticals. We have with us Yasir Rawjee, who's the MD and CEO of Glenmark Life Sciences, joining in to talk about the business. Hi, sir. Thanks very much for joining in. 21% growth this quarter. There's been a good comeback which has come through both in your external business, which is ex of Glenmark Pharma, as well as Glenmark Pharma. Can you tell us what led to this revenue growth of 21%?
Yeah, thank you for having me on the show, Ekta. I think, we've got three levers of growth here, right? So we've got of the business. So we've got the generic business, which is the largest business. Now, this has been firing every quarter at about 15-ish% growth. So, this continued to fire because we are a well-distributed business across geographies and across products. What also fired very well this quarter was the CDMO business picked up very nicely. And this contributes not only to the top line, but even more significantly to the bottom line. And then we had the Glenmark Pharma business, which has kind of slowed down in the last 3 quarters, and this fired off very well this quarter. So I think what has happened this quarter is all three of our engines of the business have fired extremely well. And that's what has led to this very good growth that we've seen in this quarter.
Right, Mr. Rawjee, good morning. Yes, good afternoon actually now. But and this is in line with what you had said after the end of the third quarter, which was more muted, that fourth quarter numbers should be strong, and they are strong. What about the look ahead really? What kind of top line growth should we expect? I mean, do you have visibility for FY24?
Yeah, so we are guiding between 12 and 14% growth on our top line. Okay, simply because, like I said, the generic business will continue to fire, right? Being such a well-distributed business. But the Glenmark business from Glenmark Pharma will also fire well because they were in an inventory correction mode and they've come back to more normal inventories. And so the buying will be more normal now rather than a muted kind of buying. CDMO also has done very well, right? Sorry about that. CDMO has also done very well. And this CDMO business will also pick up from this quarter onwards because one of our CDMO players was in an inventory correction mode and this has come back. They also have a new indication in post-operative nausea and vomiting, which will help to grow that piece of the business. So I guess we'll very comfortably be between 12 to 14% growth for this coming year.
Okay. How are you placed on margins then? Because you've done around 33% in terms of margins. Can you tell us what it's looking like in FY24? Where would you probably average?
So we're guiding at 30-31%, right? Simply because we've seen enough, uncertainties in terms of costs. This quarter, the margins were very good because the costs have come down. Okay, so solvents, for instance, right, which is a reasonably big component for us, have softened, the prices have softened, and that has played out very nicely for us. But then the business mix also has been very good this quarter on the generic side. And like I said earlier, the CDMO has played out nicely. So again, there's been a bit of a confluence here in terms of all the, margin elements also leading to these higher margins. We have guided a little conservatively, I would say, at 30-31, simply because, we don't know how, things are going to shape up. If we remain with the external factors at the same level, then I guess it would be higher. But we are guiding at 30-31.
And just to come back to Glenmark Pharma, that's about 1/3 of your business, right? I mean, that continues to remain at that level into FY24 as well?
So it has come down because in the COVID years, it had gone up to 40%, right? It's now down to around 32%. Okay. And we expect in the near term, it will be at those levels, but then going forward, it will come down even further. because we have less of an overlap on the new products.
How are you placed on solvent prices? Can you guide us in terms of whether or not there is any kind of softness which has taken place? If so, by how much? And what do you expect?
So prices are under a bit of pressure because of the US market. Okay, but again, our business is very well distributed across the other markets. So while we need to keep our customers competitive, right, by giving them good prices, we expect that, despite this kind of, price improvement that we'll have to give to our customers, right, overall, we'll see prices at a reasonable level. We expect an erosion on the overall bucket of 3 to 4% going forward.
Just wanted to touch upon one more piece of information with regards to Glenmark Life Sciences, the generic API business, because there are a couple of your peers which are indicating that there was a lot of pricing pressure within that segment. What was there pricing pressure within that segment for your company in specific? And how do you manage to be resilient within that space?
Pricing pressure, like I said, in certain markets is certainly there, right? The US, especially, Europe a little bit. But then the other markets hold on pretty well. The other thing that we were able to do quite successfully is pass on the cost, some of the cost increases last year to our customers. So there, I think, we are a bit lucky, I would say, and it's the distributed portfolio that we have. The newer portfolio gets us better prices, better margins, and as a result of that, it gets distributed. But if we had a narrower portfolio, I'm sure we would have that challenge, right? With pricing at the front end, putting pressure on margins. So overall, there is a little bit of pressure in some markets, but then we are able to distribute it across markets and across the newer products. And so that's how that resilience actually comes in.
Just one last question on capacity so I think the H capacity went up. Ankleshwar, I think, is on stream. What's the situation right now, and is all of it behind you?
So we couldn't have been luckier with the H coming on last quarter. Okay, I mean, we've already sort of reached like 80% utilization with the new capacity at the H. With all this new business coming in, so it's great that we were able to get it, done by the end of Q3, and then Q4 it really kicked in exceedingly well. On Ankleshwar, we are kind of midway on that intermediates capacity, but that has also played out very nicely for us in this quarter. And we expect, and we will finish that off probably in the first half of this year, so that also becomes, contributing towards the, business servicing for this coming year.
Quickly, before we let you go, Glenmark Pharma has to reduce their stake to around 75% by next year, August. Are there any plans to sell stake? What is the plan to reduce it? There were reports doing the rounds that they would be considering selling majority stake in Glenmark Life Sciences. If you could just clarify on a couple of these points.
So absolutely that, there needs to be a dilution of Glenmark Pharma's stake from the current, 82.8% down to 75%. That's a SEBI requirement, and that process is on. We are also contributing to that process in order to help that reduction in the stake. With respect to, how much will be sold is really up to Glenmark Pharma to decide. So we will not be taking that call, and so I won't be able to comment on that. But yes, the process is on, right? And we are participating in that process to bring down that stake.
Okay. All right. Thanks very much, sir. Good speaking with you. It's a pleasure having you with us here on CNBC TV18. Good luck with the business going forward. 39 points, 40 points on the Nifty is what we have.